Your Bitcoin intraday backtest over 790 bars shows 21% win rate with expectancy at minus 0.24. When you're taking 4 open positions right now across Bitcoin, Ethereum, and silver, are you comfortable scaling when the recent live record is 1 win in 6? Fair question, Patrick. The backtests on intraday Bitcoin and Ethereum separately show better expectancy than the desk's recent live results. That's a data versus execution problem, not a strategy problem. I'd change my mind if the next 3 trades broke below expectancy on both the backtest and the live record. You're right that backtest and live can diverge, but your swing trades on Bitcoin show 2.7% win rate across 46 bars. That's not execution noise. That's a strategy failing in real time. Point taken. Silver short at 64.689, with stop at 64.85, is the tightest risk-reward on the board at 1 to 2.3. If that level holds, the trade is invalidated and we move on. Bitcoin and Ethereum both rallied into rising open interest. Bitcoin added 0.25% on contracts, while Ethereum climbed almost 0.5%. That's new money entering, not short covering. The conviction is there. But Solana printed nearly 0.6% on open interest and still underperformed Bitcoin on the day. Why is that strength in positioning not translating to price leadership? Ashlog. Fair question. Solana's move is real, but it started from a lower base. What would change your mind on whether that positioning holds through the close? Volume confirmation. We're seeing the contracts build, but without matching spot volume. This gets squeezed out fast. I've been wrong before on that call. Then we're watching the same thing. Doge and XRP both rolled over on open interest. That's where the risk is today. The Nasdaq is the story this morning, up 0.3%, while the Dow has given back 0.25 point. Tech is leading, but breadth matters here. We need to see that conviction carry beyond the 100 largest names. Ashlog, I'd push back on that. The S&P 500 is barely moving at 3 basis points. If the Nasdaq is truly running, why isn't the broader market following? That gap tells me we're seeing concentration, not conviction. Fair point, Patrick. But look at the metals, silver and copper, both up over 1%. Commodities don't move like that on rotation alone. Something's shifting in the risk picture underneath. Agreed on the metals, but natural gas dropped 1.25%. Energy's mixed. Until we see the S&P confirm what the Nasdaq is doing, I'm watching, not buying. That's the discipline we need this morning. The question is whether this holds through the cash open, or whether it was futures positioning ahead of the bell. This is a breaking market alert. A $1.02 million Bitcoin sale hit the tape at 63,722 just over 3 minutes ago. The block was absorbed on the bid, meaning demand was there to catch it. That's a 99 times print, the largest we've seen in this session. A crypto industry group is warning the Federal Reserve could weaponize banking access against digital asset firms. That matters because it signals the sector sees regulatory risk not just from enforcement, but from capital access itself, a structural threat rather than a transactional one. The concern has teeth, Ashlog, but I'd push back on the timing. UBS just ramped Bitcoin call options 24-fold. Does that look like an institution worried the Fed's about to cut off the oxygen? Fair point. UBS is clearly positioning for upside. What would change your mind? Do you need to see banking access actually tighten? Or is the current posture enough to make you skeptical of the warning? I need to see it. Right now this reads like preemptive messaging. Show me a denial of service first, then we have a story. That's the trade call I respect. We'll be watching the enforcement actions closely. Stocks are split this morning. The Nasdaq up 0.3%, while the Dow is down 0.25%. The S&P 500 barely budged. Gold is climbing up 0.25% on the day. Silver and copper both stronger. The dollar holding steady against the euro and the yen. Oil edging higher. Natural gas the only real loser, down just over 1%. No divergence in the risk picture. Equities, metals, and the dollar are all moving in concert this session. Ethereum's the mover this morning, up 1.3% to $1,904. That's genuine strength in a market where most alternatives are treading water. Bitcoin's up just over 1%, but Ethereum's outpacing it tells us something about where positioning is shifting. The volume story matters here, Ashlog. Ethereum's moved nearly $750 million in the last day. Bitcoin's turnover is 6 times larger. So we're talking about concentrated buying pressure in Ethereum relative to its float. That's fair, but I'd push back slightly. The real question is whether that strength holds above 1900. If it rolls over here, we're back to range-bound behavior, and the narrative changes entirely. What would move you to see it as genuine breakout momentum, rather than a tactical bounce? A close above 1912, with volume that doesn't collapse into the close. We're not there yet. This is a breaking market alert. A $10 million Bitcoin block just crossed at 63,631, absorbed as selling pressure. That's the largest print we've seen all session. Bitcoin's 21-day moving average sits at 63,512, and we're trading just above it at 63,698. The 200 is at 63,213. That's a clean stack, all three moving averages in sequence, and RSI is firm at 67. The trend strength reads as 5. The structure tells a different story, Ashlog. You've got lower highs and lower lows. That's not confirmation. Yes, price is above the 200, but the MACD histogram is rising and we haven't crossed up yet. What would change your mind on the quality of this move? Fair point, Patrick. If we lose 63,600, the next support drops to 63,633. But silver's the puzzle here, neutral RSI at 52, sideways structure, and the trend strength index at 19. That's not trending strength. That's coiling. Silver's squeezed into Bollinger Bands at 0.67 width. When that breaks, it'll move. The question is direction. Gold's different, it's got higher highs and higher lows, but the trend strength index is only 21. Weaker conviction there than the tape suggests. Copper's your tell. Watch where it closes relative to the 200. If metals don't confirm, we're looking at a divergence, not a rally. Out of 20 graded calls, we hit 46%. 6 correct, 7 wrong, 7 that expired without resolution. The last one that failed was avalanche down. It moved against us by nearly 2%. That's the loss we need to own. Those 7 flats concern me more than the losses, Ashlog. They tell us our time windows are too tight. Are we setting invalidation levels that give us any real margin for error? Ver push. The expired trades suggest we're fighting against the natural rhythm of these moves. One open right now, Ethereum long at 1906. Order flow is 92% buy side. And open interest climbed, which means fresh money, not short covering. 31 minutes left on that one. But Patrick's question stands. What would change your mind on widening those windows? Reducing the frequency and holding longer. We'd hit fewer targets, but we'd hit them cleaner. This is a breaking market alert. A $500 million Bitcoin block just crossed the tape at 63,600, 51 times the typical trade size. The buy side absorbed it 2 minutes ago. That's the largest print in Bitcoin in this session. The Nasdaq is driving this morning, up 0.25% while the S&P barely moves and the Dow slides 124 points. That's a tech-led rally in a narrow market. Metals are doing the real work, gold up 0.6, silver up 1.3%, copper nearly 1%. Patrick, what's the trade setup you're watching in this divergence? The divergence troubles me. Nasdaq strength on thin breadth. We're seeing concentration in maybe 15 names. But look at copper up 0.9%. That's not tech. That's inflation expectations shifting. The question is whether this rotation holds or breaks. You're right that copper signals something different, but the Nasdaq's move is pure concentration, not conviction. The S&P at 7,801 should be telling us whether this matters. If broad strength were real, we'd see it there. We're testing that level now. The cash market just opened. If we can't hold above 7,800 by mid-morning ashlog, the metal's strength looks like a head fake. That's the trade to watch. Metals hold. Nasdaq holds, we've got something real. Metals roll over, we're back to noise. That is our time on opening bell prep. Over to Andrew Sinclair for Market Countdown Live. Thanks Ashlog Veli. This is Market Countdown Live. Andrew Sinclair with you, alongside Ashlog Veli, and we are looking at trading strategy and watch list. Bitcoin's holding above 63,600, up nearly 1% on the day. Ethereum's trailing at 1,905, but Chainlink and Solana are both outperforming, up 1.5% respectively. The story here is selective strength. Not everything's rising together. True, Andrew, but look at the turnover spread. Bitcoin's moving $2.4 billion in 24-hour volume, while Chainlink's only at 37 million. That's 100 times smaller. Are we watching genuine momentum or just lower dollar volatility? Ashlog makes a fair point on scale, but Cardano and Polkadot are down, both off by 0.5% or more. Dogecoin's up, XRP barely moved. This isn't a market moving in one direction. The real question is whether that Bitcoin strength holds without broader crypto conviction behind it. What would change your mind on that? Does Bitcoin need to see the altcoins follow, or can it decouple from here and still claim the lead? If Bitcoin breaks 64,000 in the next 2 hours, it runs regardless. Below that, we're watching a dead cat bounce on the technicals. This is a breaking market alert. A $1.014 billion Bitcoin block just crossed at 63,608. The trade absorbed within the market about 2 minutes and 40 seconds ago. Buy-side pressure shows in the overall flow, with cumulative volume delta trending negative but holding ground. Ethereum's climbing this hour, up 1.26% to $1,903. Bitcoin's following suit, gaining nearly 1% above 63,586. Chainlink's also in the green, posting a 1.48% jump. Cardano's the main loser, sliding 1.4% as traders rotate positions across the board. Bitcoin's 21-day moving average sits at 63,524, support holding at 63,630. The 200-day is 63,217. RSI is firm at 61, and that's the signal we're in trend territory with the trend strength index at 31. Ashlog, the structure shows lower highs and lower lows. That concerns me. It should, but the moving averages are stacked, and price is above the 200. What I'm watching is volume confirmation. It's not there. The MACD histogram is positive at 20 points, but the signal line is flat. If selling pressure picks up on volume, that lower highs pattern becomes real. Ethereum tells a different story. 21-day at 1901, the 200 at 1888. Bollinger Squeeze is tight at 0.83% width. That's coiled. RSI at 62. The Trend Strength Index at 26 trending but weaker than Bitcoin. Where's your concern? Silver's the MACD just turned positive on the histogram. But look at the Trend Strength Index 18.7 with no trending strength. You've got 5 assets bunched in squeezes. One breaks Ashlog. Where does conviction flow? Copper's the tell. If it holds above 14,200, metals stay bid. If it cracks, equities run. This is a breaking market alert. A $255 million Bitcoin trade just hit the tape at 63,567. Seller's print. That's a block worth more than 23 times the typical trade size. It did not get absorbed, the market took it clean. Ethereum's the setup here. Long intraday, entry 1884.9, stop 1882.6, first target 1890.1. That's 0.1% risk for 0.3% reward, roughly 1 to 2.3. The trend is up with the averages stacked. Price is holding above the 21 period, and RSI at 60 leaves room to run. It breaks through 1882.6. The idea fails. Andrew, that trade expired hours ago. You're looking at stale entry levels. More pressing, your last 6 graded setups lost 4.06 R with a 16% hit rate. Even on the intraday Bitcoin backtest, you're running negative expectancy at minus 0.24. What would make you step back from this time frame? Ashlog, the backtest sample, is sound, 124 trades over 790 bars. The live record's been rough, I grant you, but that's variance on a negative edge, not evidence the method's broken. Silver's offering better odds right now. Short at 64.689, stop at 64.853, first target 64.312. 1 to 2.3 again. The trend's mildly down, price capped by the 21-day. If it closes through the stop, we're wrong. You're now trading both directions across multiple assets within the same hour. That's what happens when you need a winner. Silver's only shown you 58 basis points of potential reward against 25 basis points of risk, technically sound. But your execution on directional calls has deteriorated. When does volume confirm this setup? The tape will tell us. We'll watch the first 30 minutes. Until then, we're long Ethereum intraday and short silver on the same logic. Trend alignment and mean reversion. If either closes through its stop, we exit and move on. That's the discipline. A crypto industry group is warning the Federal Reserve could weaponize banking access to squeeze digital asset firms out of the market. That matters because it signals growing tension between regulators and an industry that spent years fighting for legitimacy in the traditional financial system. The threat is real, but Ashlog, how many crypto firms actually depend on Fed-regulated banks for operations at this point? Most have moved to alternative rails. What would change your mind on whether this is meaningful enforcement or just political theater? Iran's escalation plans are moving oil stocks higher today. Energy plays are repricing geopolitical risk, and that's the kind of tail risk that tends to stick around once it surfaces. Oil's up, but it's only recouped 2 weeks of losses. The market's pricing in maybe $30 a barrel upside from conflict, not a genuine supply shock. That's still skeptical. Finally, Ackman took $400 million in losses on Netflix, now claims the company won the streaming wars. It's a reminder that conviction trades don't age well when sentiment shifts. This is a breaking market alert. A $217 million Bitcoin block just crossed the tape at 63,599. That's a 34 times oversized print on the sell side. It hit 2 seconds ago and was fully absorbed into the market. Bitcoin's selling pressure is deepening. We're tracking nearly $500 million in net outflow this hour, with the largest single print, a $218 million block, hitting the ask at 63,599. That's real distribution. Meanwhile, Ethereum's hemorrhaging even harder relative to its size, nearly $1.2 billion net short, which is 29.5% delta. The divergence here, Ashlog, is stark. I see the flow disparity, Andrew, but the composition matters. Ethereum's done over 4,000 trades versus Bitcoin's 2,700. That's higher participation driving the delta, not necessarily capitulation. What would shift your read on whether this is institutional repositioning versus panic liquidation? Fair point on participation. But look at the order structure. Ethereum's largest single trade was only 63 million. Bitcoin's showing block trades nearly 4 times that size. That's institutional conviction on the sell side, not retail noise. This isn't repositioning, Ashlog. It's distribution. Then we need to watch whether altcoins follow Ethereum down or hold. If Solana, Ripple, and the rest decouple upward, your thesis breaks. That tells us Ethereum's alone in this. Exactly. That divergence is what we're watching into the bell. The Nasdaq is the story this morning, up 55 points and 0.5%. That's outpacing the S&P 500, which is barely moving. The Dow's actually down 124, so we've got a divergence forming. Ashlog, what's driving the tech strength when broad market momentum is stalling? Metals are rallying hard. Gold up nearly $24, silver up more than 1%. That's typically a risk-off signal, which should weigh on equities. But the Nasdaq's ignoring it. That tells me investors are rotating into growth names specifically, not showing confidence in the market overall. What would it take for you to call this a genuine risk-on day? Fair point. If the Dow turns positive and closes in the green, that's when I'd call it synchronized strength. Right now it looks tactical. But Andrew, watch copper up 0.2% alongside gold. That's construction and inflation hedging, not fear. Mixed signals everywhere. Copper's up because growth expectations remain intact despite the metal's bid. Still doesn't explain why the Dow's lagging. Financials weak. We'll find out at the close. For now, the Nasdaq's your tell on where smart money's betting. Bitcoin's 21-day sits at 63,542, the 200 at 63,225. Price is 63,603. RSI is 56.7 firm territory, but the structure says lower highs and lower lows. That's a warning signal inside a trend that's still rated strong at 33, On the Trend Strength Index, Andrew, those moving averages are stacked bullishly, but I'm watching the MACD histogram. It's only 11 basis points wide and falling. That's divergence against your price strength. What would change your mind on this setup? The histogram tightening is noise until resistance cracks. Ethereum's flatter 21 is 1901, 200 at 1888. Price 1902, RSI neutral at 54. Gold and silver both squeezing. Copper's the real move here, price 14,244 against a 200 that sits 14,231. Copper's only 250 basis points of room to the upside before it hits resistance at 14,460. That's not much margin for the risk you're taking on a week, the Trend Strength Index of 28. Ashlog, the structure in copper is what matters, higher highs and higher lows still intact. Silver's the MACD just crossed up. That's your confirmation for the metals complex. Chainlink leads the board up 2.2% to 956. Ethereum and Bitcoin both positive but modest, Ethereum at 1.16%. Bitcoin just under 1% at 63,600. Volume matters here, Andrew, and I want to know, are these genuine buyers or short covering ahead of the bell? That's the question, but the downside tells a different story. Cardano's down 1.6%. Polkadot and Avalanche both negative. If conviction were there on the upside, we wouldn't see this much red in the alts. What would change your mind on the strength of this rally? Ashlog, if we see sustained buying in Bitcoin above 64,000 with volume that confirms it, that changes the picture entirely. Right now, these are dead cat bounces in a sector still wrestling with regulatory headwinds. The tape on Ethereum short-term supports long entry around 1,884.9. Stop at 1,882.6. First target 1,890.1. Risk is 0.12% for reward of 0.28%, giving 1 to 2.3. The trend stacks up with price holding the 21-period average and the 200-day at 1,883.1, while RSI at 60 leaves room higher. If price closes through 1,882.6, the setup breaks and the trade is wrong. Gold is up 0.5%, silver up 1.2%, copper climbing 2%. The metals are moving in sync, and that matters because the dollar is flat. Meanwhile, the Nasdaq is outpacing the S&P 500 by a country mile. Ashlog, where's the divergence we should be watching? The divergence is crypto sitting still while equities accelerate. Your metals rally tells me inflation expectations are creeping up, but Bitcoin hasn't followed. That's unusual. If risk appetite were truly returning, we'd see it lead, not lag. What would shift that for you? Fair point. But look at the real picture. Tech is running. Commodities are bid. The dollar's anchored. That's the environment where crypto typically performs. The question isn't whether it will move. It's whether it's pricing in something the rest of the market hasn't yet. Then we're watching different signals. Silver's up 1.2%, while Bitcoin's treading water at 60,000. That spread is telling us positioning, not conviction. Until we see follow-through in altcoins, I'm reading this as caution masquerading as strength. You're right to watch the alts, but positioning and conviction converge when volume arrives. We'll know within the hour whether this holding pattern breaks up or down. One win in 6 trades across the desk this week. Bitcoin and Ethereum short positions stopped out. Solana expired underwater. The expectancy sits at minus 0.67 R per trade, which means this setup is losing money at its core. We're down 4 R total, and that gap between a 16% hit rate and what you'd need to break even tells you everything. The backtest show the same pattern, Andrew. Bitcoin swing trades have gone 2.7% win rate across 42 bars tested. That's a structurally broken system, not a streak. What would change your mind on shorting this asset class when the data says the longs have the edge? Ashlog, the backtest show it too. Even intraday Bitcoin at 21% doesn't overcome the losses. That's the honest read. But we're running 4 open positions right now on Ethereum and silver that reset the thesis. If those hit first targets, we're back to even on the week. Even assumes execution. Your open Ethereum swing trade risks 1.3% to make 3%. On current form, that's a 1 to 2.3 ratio you need to nail twice. The math works only if the next 3 trades reverse the pattern. Correct. Which is why we document it live and close what breaks. No averaging, no hope. The record stays on air exactly as it happens. We're tracking 3 open positions right now, and the setup tells you something uncomfortable about conviction on the desk. ADA appears twice with conflicting directional reads. One says down at 96% sell-side order flow. The other says up at 53% buy. That contradiction stops being credible if either one touches its invalidation level. Andrew, those ADA positions are 13 and 28 minutes apart, so they're catching different market regimes entirely. What I'd push back on is treating them as a single thesis. The real problem sits in SOL down at 75.41, where we've got 44% sell pressure, but 73% of accounts still long. That's the one with actual flush potential, not a regime question. Ashlog's right on the positioning imbalance in SOL, but order flow at 44% sell doesn't match your leverage thesis. If accounts are that crowded long, fresh positioning explains the flow, not a setup that breaks at 75.85. Fresh positioning with new open interest up only 0.3%. That's thin conviction supporting that much long exposure, Andrew. Then SOL cracks on the next microprint if sentiment shifts. That's the tape we're watching. It holds or it doesn't in the next 40 minutes.